Okay, so welcome to my fifth teacher presentation, and today's topic is about different types of risk profiles and how these risk profiles can influence on trading and investment decisions. To start off with a small introduction about these risk profiles. Risk profiles are a reflection of an investor's tolerance for risk, financial goals, and time horizon. A risk profile is crucial for investors to identify their risk tolerance, which eventually helps with selecting the right investment strategy to achieve long-term financial goals. And in today's presentation, I will discuss three different types of risk profiles, and these are conservative risk profile, the moderate risk profile, but also the aggressive risk profile. And I will start off with the conservative risk profile. Conservative risk profile is when a trader or investor has a low tolerance for a risk and prioritize capital preservation over high returns. This means the person focuses on low risk stable assets such as bonds or blue chip stocks, for example. This kind of risk profile is focused on low risk, which for example influences your investment decision because you tend to take a higher position in bonds than, for example, equities, because these are more volatile, of course. And yeah, this risk profile is usually for investors near retirement or with short-term goals. And the next profile is the moderate risk profile. This is a profile of a trader or investor that has a more balanced risk tolerance. So this type of person is willing to accept some level of risk for moderate returns. This means that you also have a more mixed portfolio with bonds and stocks, aiming for both growth and also stability, of course. In this case, this could mean that you, for example, have a portfolio in which 50% goes to equities and 50% goes to bonds, but that this is totally based on your personal preference. Okay, that's everything. Aggressive risk profile is basically a trader or investor with a high risk tolerance, and most of the time these are seeking just for maximization of capital growth. This means that you are willing to take more risk for higher returns, which most likely mean that you will have a high exposure to equities. So your portfolio will probably have like 70 to 80% of equities, for example, and the rest will be put in, for example, bonds, more stable. This is more for the younger generation with a long-term goal, for example, like retirement or a business in the future. So, a conclusion. Based on the previous slide, we can see that the risk profiles have influence on the customization and the customization of the portfolio. Each profile has a different risk tolerance, which creates different portfolios. But next to the risk tolerance, also time horizon has a huge effect on your investment decision, because when you are younger, you can afford to take more risk as when you are older and you have to pay bills, for example. A conservative trader has a low risk tolerance, which would have less effect of market downturns because bonds are less volatile as equities. The conservative trader has a high position in bonds, and the aggressive trader has a higher position in equities, which are more volatile and will be more affected by the market downturns. That was a quick example. Moving on to the final thought. So, what is the key message of this presentation? This information shows that it is really important to know which risk profile you have to make, which risk profile, to identify which risk profile you have, to make sure your strategy aligns with this, and it also aligns with your like your financial goals and stage in life that you are in right now. Okay, so that was basically it. I think yes, that was the end of my presentation. I hope everything was clearly explained and you find it pretty helpful, of course. And yeah, I will see you in the next video.